How you Warriors? Jackson Hole Week. How are you? Shahab, Ingmar, how you Blake, Bran, Mike Bergman. Hi K-Man, welcome back. AJ, Glenn, Mike, how are you? Paul, everyone's doing okay? Okay, so dollar's under a little pressure again today, down 27, and this is where I have confluence and where I think there's going to be a major battle at this support level at par. So they have a speed line, 200 week moving coming in at par 30. So we'll see if there's that much left in it. I think we're at full crew today, getting some follow through in Euro.
Actually, I think we're missing Ryan today. I think
Okay,
yeah,
okay.
I don't know. I don't know if Ryan's
He's
around,
still in
but
the pool.
he might still be in the pool. And good morning,
Okay,
Dale. This is going to be a big week with Powell.
yeah.
Powell up on Friday. It's going to be, is he going to set the stage for a bigger cut than the market is? Well, are we looking at a quarter or 50 basis points? I think that's the question going into this week. And will Powell be more, more hawkish and
Yeah.
suggest that we might only get a 25 basis point cut, or is he just going to be super dovish and really open the door wide open? And I think that's what's going to be the dollar driver on Friday, right?
What time is he on? Do you know?
10 a.m. Eastern.
Okay, well then I would say the whole thing depends upon how many Bloody Marys he has.
that
Huh?
I'm assuming, gosh, could you imagine those guys? I wonder what kind of party suits those guys put on while they're
I,
in Jackson Hole.
no change is Kurt's prediction. I don't think the market would like that.
Oh my
But
God, the
they're
market
not,
would
they can't change
absolutely.
rates today anyway. But
That was
uh,
like, I think if I looked at if I remember correctly, one of the headlines in Bloomberg over the weekend was like, if basically if the Fed doesn't give the market what we're looking for, the bark is going to shit the bed. That was the overall uh you know headline. Basically, it didn't say poop the bed, but
yeah,
oh, if there was
I got the
like
picture.
no indication that a rate cut was coming, the market would absolutely lose 5% overnight over the weekend. So
Commodity currencies acting pretty good. Let's bring K-Man in. Haven't heard his voice for a while. Hope you had
Good
a
morning, Dale. Good morning, Blake. Good morning, everybody.
yeah, glad to
welcome
have you
back,
back.
Ken.
Yeah,
Cheers.
hope you had a good trip and you feel all recharged. And
Um,
now,
yeah, I'm tired from all that driving around. I need a break from my
oh,
break.
a vacation from your vacation.
Yeah, actually,
One of those.
yeah.
Were you keeping an eye on the markets
Of course,
now?
of course, I was
Oh,
because
okay.
I had a bit of an interest in it. So in gold mainly. Yeah, as Blake was already mentioning, it's a lot will depend on Powell. But before we have a couple of interesting things, we have PMI day on Thursday. We will also hear from Ueda on Friday early morning. He will be speaking in Parliament. So there's a couple of things to look out for this week. But yeah, most of it will be decided on what Powell says, or what he does not say.
Okay, view, you have a dollar view?
Yeah, well, I'm not going to fight what the market is doing right now in a big way because I was like short dollars via gold over my holidays. So I've taken most of it off now. Yeah, the only one here is this one. I think there's a very good support here, right around the 136.50 60. And with the Canadian CPI up tomorrow, that may be an interesting one, especially if it holds. The yen reminds me exactly of that Monday before I left. The reaction overnight, we had this three big figure decline. It's not just the dollar, I think, that was at play there. There's been a rumor or an article saying that Japan's 7-Eleven retailer, the convenience stores, they may be bought over by the Canadian retail chain or convenience store chain, and there may be a bit of M&A there as well. The market speculating on some Japanese yen to be bought for this for that takeover, which is a pretty big amount because they are valued at above $30 billion. So could be depending on what the deal will be or would be. There could be a bit of M&A. So I think there's a bit of M&A in that yen as well, or speculation of at least.
Well, it's funny, I remember when I asked Peter Bookvar if he was long yen, he said he was doing it through 7-Eleven. So with yen collapse here, 7-Eleven might
I
get
remember him
bought
saying
out.
that as
7-Eleven.
well.
I didn't understand it at the time, but now it kind of rings a bell.
Well, perhaps he had a very good bell then, because 7-Eleven rose 20% overnight, I think.
Okay, he's going to have a good month today.
Yeah.
All right, all right. That happens to everyone, fortunately, once in a while to make up for all the other crap, right? So Canada, there's news coming. Couldn't even get a rally. Looks like to me that we're probably headed towards this infamous 136 range again.
Hmm. Yeah, it could
I
be,
mean,
but
I don't. It
hmm,
looks like a magnet down here again.
it does, doesn't it? Yeah.
Yeah.
If 136.5 goes, we're probably going to be trading down there quite quickly, but we'll see. Tomorrow,
Okay.
that CPI can change quite a bit.
Okay. What did you think of the risk recovery last week?
Well, all those things we were talking about that this morning in the chat room. It seems like a constant overreaction to everything, and get me out of everything, get me into everything, and we're still in the same pattern, and I reckon we're going to have another leg come Friday. Um, yeah,
Another leg which way up? New
and
high?
I really don't know. You know
Oh,
what? My personal view is door wide open to cuts, but I don't think Powell will commit to 50 BPs. He's not the kind of guy to commit to everything before it really happens. But then we have another jobs report, another CPI before the next Fed meeting. But I don't think that, well, personally, I don't think that Powell is going to give the market 50 BPs on a plate on Friday.
well, when I look at risk, I'm going to ask Blake this. It looks like a layup for new highs after the recovery was so strong in the S&Ps. Um, you have rates coming down. You have a weaker dollar. You have the Fed. Uh, you have all this going for the market. Why? What's the reason to be short? So, the only reason I could find to be short is because I can't find many reasons to be short.
Mm.
Okay, I mean that's the only really those are the only that's it.
Yeah, I mean the earnings aren't bad. I mean
Yeah,
we're not seeing economic data weaken. The Fed is cutting, as you pointed out. I mean they're going to be
things
easing.
couldn't get any better.
Yeah, I mean it's like kind of a Goldilocks scenario right now.
Yeah, Goldilocks.
And I think the thing that is going to turn the market is if the Fed chair this week doesn't give the market what they want, and the market really wants to see, because I think K-Man, you pointed out pretty well. I don't think Powell's going to be, giving us any indication that he's going to be cutting rates 50 basis points. And I believe that is going to be disappointing for the market. I think the market's expecting rate cuts, but I think the market really is hoping it's going to be more aggressive. And maybe that lack of sign from the Fed chair that he's going to be like, maybe starting on some aggressive, rate cut campaign, getting the Fed funds rate back down to like 3.5%. Everybody has this like idea in the market that, the Fed's going to come riding to the rescue and, slashing rates aggressively, making it easier for the first time home buyer to come in and, really loosening monetary policy and easing rates. And if they're not going to get it, I mean, maybe the market, creates a lower high here as a result,
Well, the Nasdaq has probably the best chance because that was only 61.8. Doesn't look as good as this. I mean, that's almost there.
Yeah.
I still say the Russell doesn't look great. It looks okay. Dow looks, you tell me. Okay, so to me, it's a pretty tough call. So
Hey, I got a question, and I forgot to check over the weekend. I did the week ahead video very early. I did it on Friday, which normally I don't do, but I knew I was going to be away. I had to leave at like 7 in the morning on Saturday morning, and I was gone all day, so I knew that was going to happen. And maybe somebody in here might know this because I haven't checked. Is Nvidia reporting this week?
I think one more week. I'm not
Oh,
sure.
okay. So Nvidia is next week. Okay. I wasn't sure if Nvidia is this week or next week. Um, okay. Just curious.
Okay.
All right.
Well, yeah. So here's NVIDIA. I mean, it went to a lot of those downside targets before the whole market turned. It's the same question you have with the S&P, all the markets right now. Is this a rally to sell, or is NVIDIA going to blow off to new highs? What do you think, Blake?
Yeah, I mean, well, I think
A
Nvidia's
million
I think
dollar
Nvidia is
question.
it's gonna really drive the market over the next, couple of weeks, I guess, whenever they report earnings.
Yeah.
But Dale, I know K-Man's back. I can take the charts from here, but I do want to point out that Grega's here as well. So we should probably talk to him and see what he sees, because I know he posts all of his here, I'll take it
Go
over
ahead.
because I know he posts all of his charts here on ForexAnalytix. He's our in-house Elliotician. Grega, good morning.
Hey, good morning. After
Hey,
2 weeks.
how's your holidays been with the kids?
Very nice, excellent. But it's over too fast, too soon, always. So, but
Always.
glad to be back. So,
Yeah, nice to have you back. Hey, we were just talking about, the equity markets. How are
mhm.
you seeing the S&P here? And is this the right count that I have that you're looking
Yeah,
at?
yeah. I just updated this earlier this morning. So yeah, I mean the stocks are back in risk on mode. I think that we will see a new all-time highs. We
We
had
do.
some very nice, impressive moves across the board over the last week or so. And since you mentioned Nvidia, I think that this one obviously going into the end of this month will obviously impact the whole stock market as well, like we have seen in latest two earnings reports. So I think that Nvidia, when looking at the price action itself, also has a very nice corrective loop down to $100 or $90, and from there, I'm thinking that we are just resuming higher. So whole stock market to me looks bullish. Dollar is making some very nice reversals to the downside. But if we'll get some pullbacks maybe on the S&P 500, I think there will be a chance on a spike down to join this trend. I would not be looking for any kind of a new longs at this stage. I would rather wait on pullbacks. And as you're looking yourself here on dollar index, I also think that there around 102.50, 103 area could be very nice for potential shorts if we see this retracement happening maybe this week.
Which we definitely could get this week, especially if Powell's not as dovish as the market expects. Okay, now everybody's asking, and Dale, you're going to be, we talked about this all last week. We talked about the gold market rejecting at the ascending channel. Remember our ascending wedge?
Yeah.
Excuse me. Remember we talked about, hey, every time it hits new highs, it gets sold. That means it's in an ascending wedge, 2,500 level, big psychological number. How are you reading this, Grega? Because from a basic technical analysis point of view, it is an ascending wedge. But for Elliott waves, what are you seeing?
Yeah, I mean, here's also interesting thing. We are seeing a move out of a triangle. Of course, it has some room left to reach higher prices, but whenever we see moves out of a triangle, well, this means that we are in a final stage of the higher degree impulse, meaning that whole wave 5 is most likely in very late stages. Of course, it can still extend for another 50, $100 higher, but definitely we should keep an eye that we could be running into late stages of this recovery here going into the end of this month.
All right.
Besides, I
But
think
if
one
I
of the
would have
most,
to, if
I just
sorry.
want to bring up and ask Grega, I think the most significant event in the metals last week was the gold-silver ratio turning back down.
Yeah, I mean, I just wanted to say that maybe it's time now, if someone wants to be long metals, maybe to look at silver. I think that silver is much more attractive and has some very nice rebound as well. So buying this one on dips, maybe even if we see some resistance here at 29, if we get the pullback, potential even head and shoulders bottom formation could be forming. So
Yeah.
certainly, as long as we are above 26, I'm expecting higher prices on silver for sure. And
Oh, I could see that maybe
New
a dip
highs.
back to 2750 or so would
yeah,
create this little head and shoulder pattern.
but below 26, I would most likely have to adjust my views completely.
Yeah, I mean that's a breakout point, 200
Yeah, exactly.
DMA. You know, you got a horizontal support here. I mean, silver would look kind of ugly below there. Yeah, I'd agree with that. All right, well, thanks, Grega. We appreciate the update there. It's really nice to have you back. I'm going to ask you just probably a few more things as we move along, but I want to go back to K-Man. K-Man, it's really nice to have you back in the saddle. You know, one of the things that we talked about last week, I know you were out, is you know, we're going to have Kishida is going to be out, and we got some new possibly, well, we are going to have new Japanese prime minister. How influential are they going to be to leaning on the Bank of Japan, you know, moving forward? I mean, obviously there's a few different candidates. I think Kano is like one of the front runners right now. He's more of a hawk when it comes to monetary policy, but does it really matter? I mean, are they going to put a lot of pressure on the BOJ and the Ministry of Finance moving forward? What are your thoughts about that? And by the way, having a 300 pip move in the Japanese yen on Sunday night was not on my list of things. So when I was short dollar yen, I closed dollar yen literally like right here last night, somewhere around the 38% retracement. And I did not expect another 150 pip move after that. I mean, who expects that on a Sunday night, Monday morning? You know, crazy. Anyway,
that's exactly what happened on the 5th year.
Yeah.
Had an even bigger move then, but coming back to the desk, that's exactly what I looked at. I went like, whoa, this is August the 5th vibes again, and look what happened afterwards. We had a big rally back, and okay, so there's a few things to know. First of all, 27th of September is going to be is the date now put forward for the LDP leadership votes. Okay, so we should know somewhere around the weekend or even on the 27th of September, we should know who takes over the leadership, which is usually the one that gets to be prime minister, but not always the case. So we had a few candidates already coming forward. Over the weekend, we had Kobayashi, the young blood. But we know the Japanese tradition. For them, somebody who is 49 is still 49 years old is still too much of a baby. So they may go for somebody else like Ishiba, who is 67 years old, which is in Japanese terms in his prime years. But we'll have to look at what their fiscal policy may look like. And traditionally, they don't move away too much from what's already existing. So all in all, they are not going to go for tighter fiscal or much tighter fiscal rules. I think the only one, sorry, the only one is the lady who is a foreign minister, I think, right now, who could put her hat into the ring as well. She would probably be a little bit more fiscally responsible, but most of them will probably still be relatively relaxed on the fiscal side of things. So, is it going to change much for the Bank of Japan? not straight away. I think it's going to be more important in the shorter term to know what the double header on Friday will give us. Ueda and Powell on the same day. Ueda speaks in Parliament, which we will know already before we will come online, whether it be Europe and especially in the US. But then we will have, of course, Powell afterwards. So that's going to be much for the shorter term. Looking at the vols coming back from my holiday, they are still very high. So the market is still very much, I'd like to even call it overreacting to anything that's going on. As you say, a 300 pip move on a Monday morning without news, apart from that M&A perhaps, is a big move. Seems the market is
Well,
also.
isn't it kind of like an earthquake where you have the quake and after that you have aftershocks? And that was a
Yeah,
financial earthquake.
you could call it that way. The thing is, though, that you remember I said about it that I spoke about this second quarter and second half of this year where things may be on the move. And if you look at the hedge funds community, apparently they've already turned low yen. Perhaps not the very long termers, but the speckies, they're already long yen. And that is a big change. They're long yen for the first time in 4 years, apparently, but we all know that they mostly have been short yen since Kuroda came on, right? And Abe. But it's a very big change, and I'm really thinking unless Ueda and Powell give us something like really world shocking or against all expectations, we should start to perhaps settle down a bit. 145, 150, for instance, or 143, or 144, 149. That feels to me like ahead of Friday anyway. We should perhaps settle down just a little bit because there's going to be little fresh news really driving it, right?
Okay. And yeah, so it's the yen, like I said, I did last thing I expected. I took my dollar yen off and I was short from last week and I took it off a little prematurely. I mean, that was the last thing I expected is like, wow, that was a big move. When I got up this morning, I was like, damn, I did not expect that. Anyway, let's ask Grega, since he's here. How are you looking at Elliott wave wise? How are you looking at this dollar yen? I mean, it's been a pretty aggressive move. So what are you thinking here? Is Grega still here? Did he leave?
Yes, I'm here.
Oh, okay, you are. Okay.
Yeah, I just think that there is certainly room for 140, but I think that sooner or later this pair will stabilize. As me and Cayman, we talked about the correlation with Nikkei 2 weeks back, and there was a pretty strong rebound on Nikkei, and I just pray that if stocks will continue to hold up well here, that maybe dollar yen support is not that far away like we think.
Yeah. Well, yeah, I mean, Nikkei has had a hell of a bounce back.
Yes, and of course, the drop on the Nikkei was timely perfect. Of course, was the same like with the dollar yen. So obviously, we should not ignore the correlation here.
Oh yeah, yeah. It's definitely a strong. I mean, it's always been a really, really, really strong correlation. It's broken ranks a little bit, but yeah.
If stocks would turn significantly to the downside back into some risk-off mode, if whatever happens, if maybe Powell will not deliver what everyone expects, then maybe that's the time when we should look at those yen pairs and expecting much lower prices. It would be much easier for them to continue lower, of course, if there would be a risk-off mode rather than a risk-on.
That makes perfect sense. All right, we got about hey Dale, I got a question for you. Is Dale Briscoe coming in today?
Yeah, I contacted him, sent him the link on LinkedIn. He should be here.
Oh, cool. When you mentioned him, did he disappear off of Twitter?
Well, everyone disappeared off of Twitter and went to X.
All right. Well, I thought he was
dinosaur. You can't call it Twitter anymore. But let me ask you guys this: it's called X, but do we still tweet?
Oh yeah.
Or do
even
we
even Elon says tweet?
Oh, okay.
He
So
even
it's still trade.
even calls it tweets. He doesn't mean to, I don't think, but he does. I actually saw him recently called a tweet.
Okay.
So
All right.
yeah.
Well, yeah, Dale should be here.
All right, cool. All right. Real quick, K-Man, you know, what's your for today, and not 10 setups, but what's your number one setup that you're looking at today that you think everybody should be looking at?
Can I do two?
All right. Since you've been on vacation or holiday.
Watch what's happening just around this zone here in gold. It is 24.80, 25, 25.10. That's where we could stall for a bit, I would say. That's why I reduced what I had from my holidays. And the second one is what you also been pointing at, is the support in dollar Canada, not far from here, and that's the intraday really,
Yeah,
or into tomorrow.
yeah, on the week ahead video, I'm really more constructive down here because yeah, we have CPI tomorrow. I think we have Canadian retail sales at the end of the week, if I'm not mistaken. I might be. Yes, we do. Canadian retail sales on Friday, and CPI weak could be weak, but positioning's probably squared up a little bit CFTC wise, and which has been
That'd be
probably
interesting to know, to see if there's still the huge bipolar setup on the COT with
yeah.
commercials and large specs.
I'll pull that up while you're talking. So, Dale, what do you think? What are you looking at?
Canada, you know, I'm bearish Canada, bullish Aussie. I still think there's plenty of downside. I think we'll visit your lower blue line after we take out 36. There may be another bounce from there, but I think eventually we'll see your blue line
Look
32
at
and a half,
this.
31 and a half.
These speculators are just pressing. They continue to press.
Yeah, that's a lot of fuel.
Look at it. I mean, it's like that makes it so difficult to get above 140 when you've got it's so lopsided. And I thought it would have changed. I thought we would have seen a little bit less, maybe some buying back from the hedge fund community, but nope. Nope. They are really leaning into the Canadian. But look, I just bought some last night. I bought some dollar
It
CAD.
could work for a trade,
Yeah, I mean, it's just going to be
down.
really difficult to get above 140 when the market's positioned that way.
I think it's going to have trouble getting back above 38.
Yeah.
That's where I'd be a seller if anything happened to the upside in USD CAD, right around 38 or so.
Yeah. Well, I'm gonna say that guys, if one of the things that you got to be paying close attention to is the dollar Mexican peso, it's at a long-term 618 retracement. It's a pretty big pivot. I mean, you can see how big this level's been in. Whoops, that's not what I wanted. How big this level's been in weeks past. We're holding right at the 618 despite the stock market being as strong as it is, and we've been holding up here since last week. So we have any little hiccup, any little bit of profit taking in equities ahead of Powell, you're probably going to see the dollar MEX trade back above 19. Remember, it's also a carry trade liquidation, and if you haven't seen what's happening in the dollar MEX is broken back down below this like channel it was following, and it did that last night. So now the Mexican peso is going to be under a little bit of pressure. Euro MEX actually looks pretty good as well. So you got the dollar MEX, I think, is going to lift as long as it's above 1850 is the level I'm looking at. Really, the 1850, 1860 level. You're above that, you're probably going to get a bit of a recovery in the dollar MEX. So that's what I'll be focused on today, amongst other things. And obviously, if you want more information, what we're all focused on, you just go into the trade. You can go into the ForexAnalytix chat room. Here's the general chat room. You can see all the different charts that we've been posting this morning, that everybody's posting around the markets. You can go for your news here. You can go into the trades room and know exactly where we're putting in our trades and why. And to be part of the Forex Analytics community, it's only $1 for 10 days to try it out. So make sure you do that. Now, do we have any? It's no news really today. it's going to be a driver. So I'd be just watching some of these currencies, what's happening in precious metals. Obviously, gold is on everybody's mind this morning. And as we go through the week, it's going to be a busy one. We have CPI tomorrow, as we've been talking about. We got the FOMC meeting minutes on Wednesday, and then Thursday is PMI Thursday. It's all about Eurozone, UK, US PMIs. We're going to have unemployment claims. Remember, those have been moving the market. It's the first day at Jackson Hole, and then Friday will wrap us up with the Fed chair at 10 a.m. Eastern with Canadian retail sales also that morning as well. So a very, very busy week, especially once we get past today. And Dale, if Dale is here, are you looking
Dale,
for
if
him?
you're here, I plugged in your name. I'm not seeing you raise your hand or text me something.
I see a DB raising hand.
DB
Okay,
is raising his
that's
D
hand.
him.
space B.
Let's
Okay,
see.
I see it.
All
That's
right.
him.
K-Man, I want to say welcome back to the fold, buddy. And I hope you had a great time with your family. I know it was you spent some quality time with your son, right?
Yeah, correct. With my
Awesome.
Tokyo branch of the family.
Awesome. And when is Ryan expected back?
Tomorrow.
Okay, good deal. Good deal. Well, then that means tomorrow, guys, make sure you're listening to the Flow Show. It'll be a full house. It'll be a full house here on F.A.C.E. And Grega, I want to say thank you so much for being here, because it's always great to hear your voice, and welcome back from your holidays as well.
Thanks, Matt.
Yeah, and for those of you that are in the ForexAnalytix community, we're going to have our F.A.C.E or our morning edge in 45 minutes. Steve is back from Sparta. I think Athens managed not to get burned down to the ground. Thank goodness. The last week he had to flee Athens to Sparta, so he'll be back. Yes, I know some of you are thinking about the movie 300. This is Sparta. Yeah. That's where Steve's wife is from, and that's where they were at last week, escaping the fires. So
Steve reminds me of Hercules.
What's that?
Steve reminds me of Hercules.
Of Hercules. All right. Well, tell Steve that. It'll give him a big inflate his ego even more.
Yeah. I'm just
Hey, I want to say, you guys make sure you stick around with Dale, Dale today, because he's always a great guest to have here on the F.A.C.E show. So Dale, it's all yours, buddy.
Okay. Thank you, team. Thanks again, K-Man. Good to have your
Dale.
analysis back here and your personality.
Thank you. Had a good interview, my friend.
Blake, good job on getting the cobwebs out this morning. So we did it in an hour. All right. And Dale Briscoe, the man
Yes, sir.
Yeah, the man who couldn't take X anymore. You X'd X, Dale. I can understand it. It's nice not to need it.
I tell you what, Dale, it was just such a time-consuming effort to be on there every day, reading what people were putting up, and responding to comments about things I posted, and then all the adverts as well. It was just there's just not enough hours in the day.
Yeah.
Hey, Dale, before you continue on with Dale Briscoe,
Hi, Blake.
Hey, how are you? I haven't forgot about you, and I know you made this really generous offer to our F.A.C.E listeners. I was actually going to connect with you, as we were coming into the fall on X, but since you're not there, maybe you can shoot me an email.
Stelios and Dale both have my email.
Okay, fantastic. Well,
yeah.
Thank you for your generous offer. Maybe you can mention it here when you're chatting with Dale a little bit later. And I've already had a few people saying I would love to meet Mr. Briscoe. So anyway, I'll let you guys
continue meet on. Right. Whoever they are, they can meet them right now.
Oh, they are. Believe me, they're in here listening to him. They love him. So Dale, thanks for being here this morning, and I'll get your email and communicate with you.
My pleasure.
All right, thank you, sir.
So Dale, I noticed, last time we were together, it was right at the bottom of the minors, and I saw that, you said I'll be long these for a while.
Yes,
Okay,
indeed.
so I don't know if you want to share your screen or not, but
I will, and
okay.
I think I missed you last time, Dale, because I think you were
Yeah, you did.
sunning yourself in San Diego or something. I
I
was
made my, you know, my guess is my internet was down, so I
no,
had to
no.
change providers. So,
I think you were at the beach, but
all
anyway,
right.
I think I was on with Blake. But as
Okay,
you know, I normally do a little presentation, but time was a little bit tight given the fact that I only sort of really realized yesterday that I was doing this today. So instead of a presentation, I will actually. I'm trying to share my
sure.
screen, but it says you cannot
Oh,
start screen
Blake, you
share
have to
while the
unshare,
participant is sharing.
bro. There you go.
Can you? Okay. Can you?
Did you click share screen?
I
Yeah,
did.
or
I
which
did. Hold
screen
on.
you wanted to share?
Yep. Yep. Got it.
There it is. Okay. Real
Okay.
GDP.
So can you see that?
Yeah. Yep.
Perfect. Okay. So I guess people that would have listened the last few times that I've been on would realize that I'm a very old and long in the tooth ex-prop trader and hedge fund manager, having worked for some of the big investment banks and run various hedge funds during my 37-year career now. So I use what's called a techno-quantamental approach to markets, which combines my global macro background. I started out in the 80s as a sort of fixed income and currency trader at Lehman Brothers before I moved into quant equity. So the mental of the techno-quantamental is obviously the fundamental background. So I'm going to start by just giving a brief overview of where I think we're at. And as you probably will remember from last time I was on, and I think it was quite apropos that Blake mentioned it, I think earlier on, we are in a Goldilocks environment. And I don't see any obvious signs of recession or inflation coming down. And this is where we're at. Real GDP is still growing around 3%. Okay, this is a completely normal environment. Jobs are still growing.
Okay.
Average hourly earnings still growing, just in the same range that they've been in for the last goodness knows how many years. Retail sales still growing 3, 4, 5%. Consumer sentiment it's come off the lows from 2022 and it's heading upwards. Inflation expectation, University of Michigan inflation expectations again bottomed around 2020 and is now heading up. And my favorite one, which I always sort of fall back on, is the long-term CPI. Okay, people say you can't chart fundamentals. Well, I completely disagree. And you can look back at this going back 50 years now as to where inflation has been and where it's going to. So in my
Looks
view,
like an important area there, Dale.
Yeah, absolutely. So I think I likened this last time I was on to a beach ball that you can hold underwater for a while, but eventually, it pops up. And this is what we've got now. The Fed have maintained very easy money for such a long period of time that there is now way too much excess capital in the system. Interest rates have been too low for at least a decade. And this is what we're seeing now. Yeah, COVID was, a one-off and a driver of the spike that we saw back in 2021, 22. But this is not going away. Now you've let the genie out of the bottle. This is not going away. And 2.5% is kind of where we're at. Yeah, it's a floor. So it was a resistance, and now it's floor. So I've even done some Elliott wave on this. So, you can see it's a very nice Elliott wave APC pattern. And now we're either going to get an APC higher or, and this is my fear, that this turns into a wave 3 and we enter into a phase of, potentially hyperinflation in the years to come. And I've said this now for the last 4 years.
Well, price controls ought to do that.
Yes, I'm not. yeah, I'm not going to prognosticate on what domestic policy is going to be, but I do believe that we are in a and I've said it now for 4 years, we are in the early stages of a generational bull market for inflation. And read into that what you will, but position yourself accordingly. So on the back of that, I am looking for assets that are going to be positively impacted by higher inflation. And I'm looking to short assets that are going to be impacted by interest rates, which over time will be much higher for much longer than people think. And
Okay,
yes,
well, what do you think? But lower first? I mean, we've had a hell of a
yes,
move in the bond market, and
yeah, exactly.
I still don't see any reason to short it here yet.
No, absolutely. So this is where we're at in terms of 10-year yields. And you might notice that, I'm not a short-term trader like, a lot of you guys are. Obviously, when I'm executing trades on a day-to-day basis, we obviously take care of what the levels are. But I think it's always important, especially when you do what I do, that you take a step back and you look at the big picture. So this is where I think we're at in terms of 10-year yields. Anybody that's familiar with technical analysis, and I think Blake alluded to this maybe last week, I think I was listening to the show last week, head and shoulders patterns are reversal patterns. And I think what we're seeing here, not only in bonds, but in another number of other markets that I'll come on to shortly, is I think you're beginning to see an inverse head and shoulders forming, which means that we could easily see slightly lower rates over the coming, don't forget, 3 to 6 months potentially. But that
3% yield.
3.25 to 3.5 is where I think we're going to go to.
Okay. All right.
And then I think we're off again at some point. Now, what the driver of that is going to be, I don't know, because the Fed are about to embark on a rate cutting cycle, which I think is completely misguided and inappropriate. And my view on the Fed. Don't get me started on central bankers. It's one of my pet hates. But you're right in terms of where bonds are right now. We went long TLT back on June the 3rd at 90.80 with a target of 100. We're still riding that trade. It could even go a little bit higher. It could get up to about 109. But in that 100 to 110 range is where I think we're at. So we're in a
bear market rally. Some people are calling this wave 4, Dale.
Yeah.
That when this rally's over, it's 4, which implies what you're talking about for higher yields.
Yeah, exactly, which is what I've got here.
I wanted to ask you, in the last 6 months or so, even more shorter term, the move by a lot of big funds and means they kind of have the same feeling as you do. They're really buying risk off stuff. They're buying staples, consumer staples. They're buying bonds. They're buying gold. They're buying healthcare. All these are kind of risk off, defensive type of positions, which have outperformed the S&Ps by quite a bit. So is this really kind of a foreshadowing? These guys can't do it all at once, but they're starting to shift positions to take advantage of exactly what you're talking about.
No, I don't think so. I think the outperformance of the defensives in, I would say, the last 6 to 8 weeks has primarily been driven by the sell-off that we've had in risk assets, and it's just profit taking to a large degree. But maybe if I just come on to a couple of other points, Dale, and you'll sort of see where I'm headed to.
I can listen.
So I hope so. Don't go to sleep though. So so what is the rest of the macro picture before we get on to some specifics? Okay, well, I think the last time I was on, I was talking about the US German 10-year yield spread, which broke out and then had a false breakout and has now come back down. So when this spread moves higher, it means a stronger dollar. And when the spread is coming down, it means a weaker dollar. And that's kind of where I think we're at right now, a weaker dollar, at least in the next, probably number of weeks, maybe a few months. And what does that mean for the dollar? It means probably headed down towards, you know, maybe mid to low 90s. And what does that mean? Well, that means it's beneficial for stocks because rates are coming lower, the dollar's getting weaker. And I don't see anything at the moment which would indicate to me that we're in a risk-off environment. Every single picture that I look at in terms of equities, especially, but also other risk assets, and we can come on to that, is indicating higher. And all we're saying is we're just saying minor corrections. You cannot stand in the way of this. I mean, I don't know specifically whether I would call this a Goldilocks environment, but if you're in a phase now where the Fed are going to, again, mistakenly, I would say, start cutting rates, and the dollar's going to weaken as well, then I don't see, and the economy is fine, I don't see any reason why you would want to get in the way of risk assets. So for me, you know, I made a lot of money in my career being short, and that's hence my nickname is DB Noble, right? But you cannot fight a trend, and you have to trade what you see. So all of this is the momentum factor ETF. So that was those are the S&P futures headed higher, momentum headed higher. The DAX, very small pullbacks and still headed higher. This is the ETF for broker dealers, and you can see broker dealers make money. Yeah, broker dealers are making money. The markets are going higher. You don't see broker dealers outperforming when stocks are getting battered, right? Semiconductors, everybody's getting negative on semiconductors. I don't see it. I don't see it. We are still in, you know, if I look really long term, going back, you know, 12, 14 years on this could easily still be a wave 3 of 3, which means that you've got substantially higher to go. There's nothing, this is Russell 1000 growth over value. And when this is going higher, it's a risk on environment. If I look at commodities, this is
Are you impressed by Russell's recovery? I mean,
yeah,
what it gave back from that big, huge day,
yeah,
was one hell of a negated a lot of stuff.
To be honest, Dale, you know, up until about 2 months ago, actually even till towards the end of Q2, we were short, or I was short in the portfolios of small caps because it was the obvious trade. But now the Fed have indicated they're likely to embark on a rate cutting cycle, however misguided and however short that may be. It means that small caps will begin to, in my opinion, outperform. And I actually did post about this on Twitter. I'm just thinking if I could see it. This is QQQ. So this is basically the Qs over IWM, small cap, going back 20 odd years since the rally started in 02, right? So if you look from an Elliott wave perspective, we called this, we were looking for this pink box up here as the target. Didn't quite get there, but then I posted, I think it was round about here when we had this big down week, and I said, you know, this is kind of getting close to where we're looking for now. We could be in the start of a correction, which means that small caps are going to outperform. And that's the sort of thing that you would expect if rates are coming lower, because that small caps have been struggling because of the fact that rates have been going higher, right? And their balance sheets are just not as robust as larger companies. So that was an obvious trade. But let's just come back a second. All of these things, all these different things are suggesting to me that we are still in a bull market and risk on. So that's a CRB. Okay. So we were talking about gold earlier on. I have a slightly different count to Grega. I think we're going much higher. Same for silver, slightly different count, maybe not quite as bullish. And that brings me on to the miners. You know, you pointed out we have been bullish now for quite a while on mining stocks. And my favorite chart of all, because we look at everything on a relative basis, right? Because when we run long short, we have, you know, we always have to be short something against something that we're long, because we run basically market neutral books on the long short side. we look at everything
that looks
versus
good.
the S&P.
Yeah.
This looks like it's going higher, but my favorite chart is GDX, because if I look at GDX versus the SPY, not only is it a perfect Elliott wave count on the way up here, it's hit resistance, it's pulled back to 50%, which is ideal because we always look for a 56% pullback, and it's also forming an inverse head and shoulders, and it looks now like it's ready to go. And I posted a few weeks ago saying,
Okay.
I think we're going much higher. I mean, I think 30 to 40% higher over the next several months. And these are some of the stocks we've been in. This is Alamos. This is AGI. Sorry, Aya.
Dale?
Yes.
I have a hard appointment in 5 minutes, so Blake's gonna take over and wrap up the interview. I want to.
Oh, I'm here. Yep.
I want to thank you, and we'll catch you. I'll get a hold of you on Indeed. LinkedIn, and we'll set up another date. Okay?
Yeah, absolutely, no problem.
Dale. Great hearing your voice. Congratulations on your excellent trading.
Thank you,
Blake.
Dale.
Yep, I'm here. Good morning, Dale. I'm back. I'm here. So anyway, so you were telling us these are some of the stocks that are following GDX.
Yes, so Alamos and Aya are two of the gold stocks that we've had on board, and we still like those.
So why have the miners really underperformed gold? What would be your analysis and the reasons why?
What typically tends to happen in bullish markets is that everybody migrates to stuff that's going to fly, so high beta stocks.
Sure.
And when you're trying to compete against that, it's hard. So gold stocks find it hard to compete against the super high beta stocks when things are going well. I would say what's the tailwind now is that with a falling dollar and rates being lowered by the Fed and being in a sort of stable interest rate environment on the long end for the next several months, I think this is a perfect environment now for metals and miners. But it's not just metals and miners. I mean, we run a very diverse book, as you probably remember. We believe in running very big books with lots of different positions in them. And gold miners are one of our favorites. I have to say they've done very well for us. But not just gold miners. This is Carpenter Technology. We've been long with this. This is a specialty metals and minerals company that does a lot of stuff in alloys. We've been along a lot of biotech stocks. So this is Vera Therapeutics. This is Viking, Verona. All these stocks, are going through huge bull runs. That's Tango. This is Janux. So it's not just metals and miners. That there's a lot of stuff going on beneath the hood in markets that you have to really you need to dig down and find out what's moving, what's driving it. And this comes back to something that I've used in the presentations before, which is I have this phrase, which is depth. You won't survive in markets, or you won't perform well in markets unless you have depth, which is diversification. Einstein, which is basically time, know your time frame. Probability, so understand that you'll be wrong some of the time, and I've done a lot of trades over my career, and historically I'm right about 60 to 65% of the time, but I still do pretty well. But understand that you're going to be wrong some of the time. And then T, which is, I was going to have two P's, but I put a T in there to match the acronym. So T is thorough process. So you have to have a process. It has to be a repeatable process. So don't go jumping from one strategy to the next just because yours is not working for 5 minutes, right? You have to stick with what you know, stick with the process, and then have some humility and just be aware that markets don't always give you what you want. Markets will give you what they want to give you in the time frame that they want to give it to you in, and that means that you have to have some patience as well. So just to follow up, we don't really see anything that's really bearish in markets right now. This is something else that we're kind of keeping an eye on, and sort of dabbling our toe in the water here. This is the Golden Dragon China Index. So we think China stocks, I mean, China's economy is not doing great right now, but this to me looks like another inverted head and shoulders with a perfect wave 1 up and a very long wave 2 consolidation, just to shake everybody out that doesn't have the patience to stay in a trade. So China internet stocks are, I think, one of the prime candidates for a big move.
Really?
Yeah, and I think,
I mean, and they've been beat up so badly,
Yep.
but I'm interested to hear what your reasoning is at this point.
Because I think that if we are in an environment, which I think we are, of, you know, you coined it, quasi Goldilocks, right?
Yeah.
With the economy actually doing okay over here, and don't forget that the US market drives pretty much everything in terms of risk appetite. Yes, China
Sure.
is a very special place, and I've done a lot of work in China. We've worked with a number of China hedge funds and allocated to China hedge funds over the last 15 years. So we know the space relatively well. I think in a risk on environment, in a Goldilocks environment, investors will migrate to anything which has big upside. They won't want to be in stocks that are going to make them 10 to 15% a year. They'll want to be in stocks that can make them 100%, right? It's
Right.
just human nature. And so when you get big stocks like Alibaba that's been beaten down and lost, 80% of its value since its peak in 2021, there is going to be some fishing around for bottoms.
Yeah.
And if I
Bottom
look at
fishing, and I mean, if you really don't think Baba's going anywhere, I mean, AliExpress and Baba probably aren't going anywhere. They're like an Amazon of China. So why not buy them at this discount, right?
look, it's still a $200 billion company. So this is not a small stock. This is a major stock.
Yeah.
It's a reflection of the broader China economy, and the Chinese economy. If you take a long-term view, the Chinese economy is going to be the biggest economy in the world in the next 10 to 20 years. And so if you have a long-term view, whether you're a pension fund or an insurer, you have to be allocating to China. And so if you're going to do that, you probably want to be in bigger stocks rather than smaller stocks, because there's less career risk in doing that. And Alibaba is an obvious name. I think they've got earnings coming up this week. I'm not sure exactly what day it is. Oh, it's actually last week. So
Yeah, I'm not sure.
So I think, Baba, JD, these are sorts of names that you want to be looking to maybe own for a pop of some variety. Don't forget timeframes though. Our timeframes, or my time frame, is usually much longer than probably the people that are listening to your show. So don't think that I'm telling you to go out and buy it today or for the next 5 minutes, right? And then, just finally coming on, this is another reason why I don't think I can be bearish right now. All we're seeing is pullbacks to moving averages or to trend lines or to, channel supports. So this is semiconductors against the SPY. So that means, semi stocks haven't finished yet. Here's Nvidia. Nvidia's earnings, by the way, are next Wednesday. Here's Taiwan.
They are. Thank you.
Taiwan Semi. ASML. We're not seeing anything that gives us cause for concern right now in terms of, an equity bear market. And, believe me, I would love to see an equity bear market because I make a lot of money in bear markets. But you have to trade what's in front of you. And right now, what's in front of me, what I see is, again, we'll come back to the Goldilocks. Maybe it's Goldilocks, maybe it's not Goldilocks, but it's not bearish. So, there's other stuff that we could sort of point to, but I think that's kind of the message that I wanted to get across.
I appreciate it. And, the thing is I'm having a hard time being bearish as well, but I want to get your view here. How much, because I believe it all hinges on Friday. It all hinges on, and I don't know exactly where the appetite for the market is. My assumption is the market wants and needs a dovish Fed, and I think he needs to kick the door wide open for, you know, a 50, whether we get it or not in September, which I don't think we're going to get. We need to have this week, we need to have the idea that 50 is possible, even though I don't think they're going to deliver it. But that's what I think the market needs. Do you feel any differently about this week?
I don't think it's going to make a huge amount of difference, if I'm honest, just because of the fact that markets are in the frame of mind now that rates will be cut and that we are at the start of a rate cutting cycle. Now, how long that lasts and how many cuts there are, who knows? Again, I'll say it again. I think it's misguided longer term. I think it's the wrong move, and I think it's going to reignite inflation in an economy which is not doing that badly. So I would be surprised if it was 50. Yeah, a little bit surprised. I wouldn't be totally surprised, because I think if you believe that the Fed is independent and non-biased, I think that's a very naive view of the world. I do believe there is some bias in that. So I do think, and I'm a Brit, so I have no view on American politics, so I'm not even going to go there. But I think you're coming into a presidential election period, and I think the Fed are going to try and do their best to make things look a little bit rosier in the garden. So nothing would totally surprise me, but I think he's more likely to go with 25 and then, leave the door open for more to come. And I think as long as markets think there are more to come, then I think, risk on, right?
I can't disagree with you.
At the point where he says, actually, one and done, I think that would send the markets into a bit of a tailspin, because nobody is expecting that. So he says, yeah, we're going to do 50, but then we're going to hang up our boots for the next 6 months and see what happens. That I think is potential for lots of red on the screens, but I don't see that either.
Well, Dale, it's wonderful having you here. I was searching for you a couple weeks back, and I'm like, how come I don't see Flash 360 on this? I didn't see on Twitter anymore, and I'm like,
no.
But you know what? It's nice to have you here. I did get your email. I got it from Stelios earlier while you were speaking. I am going to shoot you an email, and if the offer is still open to spending a little one-on-one time with one of our listeners, sometime this fall, we'd appreciate it, and I'm sure one of our listeners would really enjoy the opportunity.
No, I'm very happy to do that. I said before, I really appreciate you guys and what you do for the wider or the broader community, and you put a lot of effort in over the years. So I feel it's the least I can do to also, help you guys out and your subscribers.
Awesome. Well, it will be, just so everybody knows, it's going to end up being a giveaway, and it will be a lottery, because not everybody's going to get an opportunity to spend some time with Mr. Briscoe. But if you're the lucky winner, you better count your lucky stars, because it's nice being able to talk to you, Dale, one-on-one. It really is. So, Dale, thank you so much. Keep up the good fight, and good luck this week through Jackson Hole.
Yeah, I'm so long in the tooth now, Blake, that nothing ever phases me now. I'm at a point in my career where I'm very, very happy with what I do and how I do it. I can sleep at night. We run the book so that we don't really care too much one way or the other. Long gone are the days where, back in the late 80s and 90s, where I used to be trading, currencies in the middle of the night, having the Tokyo guys call us up about, the latest 50-point move in dollar yen. So I don't get that anymore. So I'm very relaxed about life. So there's nothing that JP can do at Jackson Hole which is gonna upset the apple cart.
It's funny. I switched prop firms from the Florida firm over to Greenwich, and I met with Mr. Gellos, and I was at his house, and he lives on this huge estate in Connecticut, or used to. He actually sold that and moved closer to downtown anyway. And he had set up mind you, he's in his late 60s, maybe early 70s at this point. But he had his screens above his guest bedroom bed. Like, so when you're sitting in bed, you can be laying in bed on your back and seeing screens. And he's like, well, it's life of a currency trader. And I'm looking at that going, damn, that's hardcore. So at least you're past those days.
Yeah, no, I can remember the days where we used to have little Reuters pages and Telerate pages, to take home with us from the office back in the 80s. This talking about back in the 80s now. This is when we had regular days where you'd see dollar mark, as it was in those days, not euro dollar.
Yeah.
We had dollar mark would trade like 5 or 6 big figures in a day, and you had to take a page home with you, because I've got a very funny story. One day when I think it was after a set of trade figures, or maybe it was the employment figures, and I was trading OTC FX options on the desk at Lehman at the time, and I was trying to gamma hedge one of the options that I just traded with a counterparty, and I shouted at my dollar mark trade. I said, where is it? And he says it's 2070 on the wide, and I said, what's the big figure? And he said, I don't know, I'll have to get back to you.
That's so crazy.
Yeah.
I can imagine the wild moves. Well, anyway, guys, just so you know, Dale's not on X anymore. But it's wonderful to have you here, Dale. We'll I know Dale Pinkert will be reaching out to you via email. I'm going to be reaching out to you, and I'll coordinate something with you this fall myself. And thanks for being here with us. Really appreciate you, sir.
Yeah, no, my pleasure. And say to Stelios for me. He's an ex-Imperial guy, just like myself, and he's a good guy.
I will. I'll message him that here momentarily. So thanks, Dale. Have a great one. And thanks everybody for listening in. Remember, tomorrow, Canadian CPI right here on the F.A.C.E show. I'm going to wrap us up, and thank you, Dale. Thank you all of our guests for being here, and we'll see you tomorrow. All right. Cheers, Dale.